Hey y'all, this is Audra Hicks, your Tennessee Realtor, on this rainy and foggy day here in Tennessee. I wanted to share with y'all historical interest rates. I wanted to go over year by year, all the way back to the 70s, and tell y'all a little bit about what the interest rates were during those time frames up to today as well. So stay tuned because I put the real in real estate. And please don't forget to hit the subscribe button. So the year I was born is 1972. So I'm going to go from 1972 up to last year, or really this year. I'll go over this year's interest rates as well, what we are seeing typically. Now, keep in mind interest rates. These are going to be your median interest rates. Not like everybody got this certain interest rate, but that's what they were seeing at this time. At that in that year. But some of them could have been higher, some could be lower. Interest rates, the better your credit score, usually typically the better you're gonna do with your interest rate and stuff. Also, a lot of factors go into play. Your DTI, many things go into play with interest rates as well when they determine your interest rates. So looking back at 1972, this interest rate, now this comes from like Bankrate, Freddie Mac and stuff. So I pulled this from the internet, but I thought it would be cool to like go over and see where they were for like, all these years. Like I'll be 52 this year, for the past 52 years. So they're actually better now than most of the time that they were back in the day. So 1972, they were about 7.38%. 1973, they went up to 8.04%. Then in 74 and 75, they were in the nines. 76, they went down just a little bit, and 77 to about 8.8. 5 and 8.87 in 1976 and 77. 1978, they started to go back up again. So 78, 9.64%. 79 went up to 11.2%. Wow. 1980, 13.74%. And then when we go to 81 and 82, they were 16.64 and then went down just a little bit to 16.04. Going down a little bit, that is high. That's like somebody's credit card interest rates. Or now credit cards are probably a lot more than that. But so in 1983, they got a little bit of a reprieve, 13.24%. 1984 went back up a little bit to 13.88. But 1985 went down to 12.43. Then in 1986, 87, and 88, they were in the tens. So and 89, they were in the tens. So for 4 years, they were in the tens. So still had double digits. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 years that they stayed in the teens. So double digits. And for 2 of those years was in the 16s. Whoo, wow, that's a lot. So whenever they would go down, I'm sure people would be refining really fast. But that's 1, 2, 3, would I say 10, 11 years there that we had double digits. Wow. Now in 90, 9.97, they went right below 10. That's the year me and my hubby got married. 91, 9.09. 92, 8.27. Now, I wonder about that because in 92, March of 92, we closed on our home that we had built back then, and it was double digits for us. So, but again, it depends. I was only 19 and he was 22 when we bought our first home. So, age made a difference probably in our interest rate and But even though our credit is over 8s now, I don't think that we had that when I was 19 and he was 22. So a lot is involved in that. Let's see. So 93, it went down to 7.17. 94, it went back up to 8.28%. 95 went down to 7.86. Then 96, just about 7.76. 97 is 7.57. So there's 3 years right there. It stayed in the sevens. 98, it went down a little bit to 6.91. And then in 99, it went back up to 7.46. 2000, the year 2000, 8.08. In 2001, 7.001. 2002, 6.57. So we're still in that, we're in those years ranges of coming off of last year to this year. 2003, 2004, and 2005, it was in the high fives. So that's where we're probably going to be next, just right below 6, you know. So 2006, 7, and 8, it was in the 6s again. 2009 went back down to 5.38. 2010 and 11, it was in the 4s, like 4.65 and 4.86. 2012 went down to 3.88. Everybody was refining then, you know. But they were probably way back here too. So 2013 and 14 went back up a little bit, right above 4s. Then in 15, it dropped to 3.99. 16, 3.79. 17 and 18 and 19, it went back in the 4s. And then 20 and 21, it was in the 3s. I think in those time frames, we had refied ours not to do cash out. We just refied because we knew the interest rates were dropping a lot. I think ours was at 3.875, it seems like. And there was a time where we knew they were going to be in the 2s, and we got to lock in at 2.5. So we like our 2.5. So we keeping that one. And it was only for like a day or two. I think we missed 2.25 by a day when we did it. So, but it was only like a little glimpse in time that we could get that. So 22, it was 5.53. 23, they say 7. Now I saw 7, I saw 8s. Again, it depends on your credit and stuff too, and a lot of factors. So I saw 8s and like a 9. It depended on what kind of loan they were getting as well. Last year. This year, like right now, we are about 6.6 on the average. But you know, they think we're going to be in the 5s this year. Somewhere in the 5s is where we're going to be. So, you know, people are already feeling better about getting back out and buying. So, you know, if we continue to go down, that will be a good thing for the buyers, and they're going to get back out there and start shopping. Good for our sellers, because then the homes won't sit as long either. So, so I thought this was interesting. Y'all tell me what you think in the comments below. And and then, you know, I hope y'all like my content. If you do, please like, share, and subscribe. And I will see y'all tomorrow. Bye, y'all.